The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 10 a.m. Eastern Time, Thursday morning, jumping right into the market action. We're sitting at 3,800 directly on the S&Ps, down about 15 points. Quite the day yesterday. You started off the S&P action at about 4:15 a.m. Eastern Time, within a couple points of 3,900. You fast forward to almost midnight last night, and you're down 120-plus points in the S&Ps. Now, you make it up to a price point of almost, what's the high this morning on that opening bell bar? We got a high print of 38.35. We've now given up 37 points in the S&Ps, 37.97. We're now below where we were trading towards the end of the trading day yesterday. All the markets currently in the red. Got the NASDAQ 100 accelerating 12,525, bumping right up against the lows we had last night. I mean, my goodness, this sell-off we saw in the last 30 minutes, folks. We were up in the NASDAQ 100. Tech stocks pulling back to the tune of about 250 points right now. We were at 12,765 on the opening bell bar, currently trading 12,521. You get the Dow, maybe the strongest of the indices right now, as basically flat to negative by 5 ticks right now, 31,234. Jumping to commodities, currencies, whatever you want to call it. Bitcoin reaches 53,000 on the dot yesterday, just above 50,000 right now at 49,300. Crude up 83 cents, $62.11. Gold pulling back off $4.80 at $17.11. We got to jump to notes and bonds right now. Pretty tame action today after quite the pullback early in the day yesterday. We got the 10-year up 3 ticks on the session at 133.04. We got the 10-year note sitting with a yield of about 1.47%. Weekly jobless claims this morning, 745,000. Pretty much in line with expectations. A rise of about 9,000 from last week's total, which was about 736. But you see it on the chart. We're kind of stuck at these levels right now until we get over that COVID hump. Some of those numbers, though, coming from some of the hardest hit states, Texas in particular, because of what happened maybe with some of the weather there, suffering one of their steepest declines in jobless claims numbers, factoring into that total. And speaking of notes and bonds, we're going to get Chairman Powell out there today. He is going to be speaking for a webinar, a Wall Street Journal webinar. All expectations are for him to push back a little bit on the rising yields that we've seen recently, whether it's the 10-year, the 30-year, across the board. With that in mind, let's jump over to our man, Kevin Hinks, right after this program, folks. Every trading day, 11 a.m. Eastern Time. Kevin Hinks, Alex Coffey, the team at the TD Ameritrade Network, breaking down the market, breaking down hypothetical trades in the option market, earnings season. Kevin Hinks, good morning.
Good morning, Tommy. You know, today's going to be an interesting day as Jerome Powell, and you just mentioned it, he's going to stay the course on his overall plan for lower rates. And I expect him to reiterate. I don't expect him to change one word of what he said last week in front of Congress. I expect him to, simply pound the table on where inflation is and where rates are. So, yeah, it should be interesting. We'll see what effect it has on the overall market, that's for sure. Because the last couple times he did it, at least one it sent the market up for the day. The other one, it sent the market up for part of the day, and then it wore off. But, yeah, we'll see. Sure. Today should be an interesting day, Tom.
Yeah, I was going to reference, the last time he was out there, right? The moment his remarks got released, I was talking to you at 10 o'clock. I can't forget exactly, can't remember exactly what day it was, but he released his remarks at 10 o'clock before he was going in front of the Senate or the House. And boy, by the time we finished our interview at 10:15, Kevin, this market was on fire, climbing back from a lot of the losses it has. All the expectations probably factored in there, but you could have made the same argument when he was in front of the House and the Senate, that all the expectations were for him to be kind of staying the course, and somehow he exceeded the course when he came on last time. So there'll be all eyes on him, I imagine, with what yields are doing in a big way. How about the volatility yesterday, right? We're always, I've learned from you, the fine people in the TD Ameritrade Network, the importance of implied volatility, right? The VIX, we're sitting with the VIX now over 28, Kevin, with this market. We talked about it yesterday in terms of, some negative action, of course, in the markets. But all things considered, we're chopping around right near all-time highs in context of what's going on in the economy, especially. And you got a VIX sitting right now at 28. When you look at some of the trades you guys are making over there on Fast Market every day, talk to us a little bit about what you're looking at when the VIX. You have a VIX at 28 right now as you're trading some of these option plays and how that's just kind of factoring into what you're looking at in the market, if you could.
Yeah, we teach our viewers, Tommy, that higher levels of implied volatility, you should run towards them, not away from them, because they are levels to be embraced. And what do we mean by that? Well, if you think of it in the most simple way, is that higher levels of implied volatility bring in higher premiums in the options, which if you are a seller of spreads, a net seller of premium, it increases your daily decay. So that is the way we look at implied volatility. As long as you understand the movement and use the metrics on the Thinkorswim platform to understand the expected moves during the periods, volatility is something, higher levels of implied volatility is something that should be embraced. And that's what we try to do every day.
It's pretty cool, man, when you look at one of the factors, of course, of the turmoil in the economy over the last year plus now, really, is that the VIX has been stuck above that 20 level. I mean, I just have a 3-year weekly going on my charts on the Thinkorswim platform. And for the longest time, Kevin, we were flirting with like a 12 VIX. We were flirting with an 11. I remember talking to you, historical average, somewhere at about 16. Is that right? 15?
15.39 to be exact.
Okay. It was a tough road when you're trying to play volatility, when you had this VIX that was, and again, probably rightfully so, as the market was on a one-way upward trajectory for almost a decade, to not exaggerate, but almost, sitting it there. And now we've had a VIX that's basically been oscillating between about 20 and 30 with some spike highs when this market's gone a little haywire. For an options player, that's factoring into all the equities. And I know you guys were always thinking about it. I just kind of want to talk about it for those out there. But what are you guys talking about on the program today, Kevin, coming up next?
Today we're covering 3 names coming out with earnings. Broadcom, AVGO, is coming out with earnings. And then like Folio will do a presentation on Costco, and we'll trade Costco today. They come out after the bell. And then Gap Stores, GPS. So is our third stock of the day. So a little bit of retail and a little bit of the semiconductor industry.
Boy, those chips, right? Taking a look at Broadcom just in the daily, from $155 up to almost $500 just in the last couple of weeks. And we talked about, some of these, you could call them grocery, whether it's retail or Costco, man, pulling back from $380 down to $323 with the likes that we talked about. Walmart really pulling back, continuing, and Gap, of course. Tough sector, but boy, from $5 to $26 to start off the day. But Gap's down 3.7% ahead of their earnings. Kevin, we appreciate the update, man. We appreciate the education. We look forward to the program. And have a great weekend, man. We'll talk to you next Tuesday.
Always a pleasure, Tom. Thanks for having me on.
Me too, Kevin. Stay tuned, folks. We'll be right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got the S&Ps down about 21 points right now. Some dicey action when you look at the chart. We're talking about below the levels of February 26th right now. That low was 37.85. We make a low so far today of 37.77. We've climbed back above that level. But you see the trend. We're talking about a level that lower than where we were. I mean, these bars, talk about an acceleration, right? As I mentioned, we were just sitting at 3,900 yesterday. You accelerate, we're now below 3,800. You check out the run we had in February, quite the run. From almost 36, the low of February 1st, 36.56. You trade up more than 300 points to a high made on February 16th. Since then, a little Fibonacci levels. We're down about almost approaching the 618. That level, 37.71 in the S&Ps, approaching that level right now. Again, though, when you look at where we are, folks, all things considered, whoops, let me back that up. You take off the Fibonacci level. Come on. And you're talking about just chopping around at basically all-time highs, right? You can't go up forever, folks. The volatility that we may see, talked about it with our man Teddy Kegstad yesterday, just kind of speaking about the transition. Now, we got ADP payrolls yesterday, right, to the tune of about 100,000 plus for the month of February. We're getting non-farm payrolls in about 22 hours from right now, 8:30 a.m. tomorrow morning. We get non-farm payrolls. The market is really going to be thinking about what happens to this economy as we overcome the COVID pandemic. So I encourage you to anticipate that we may see some very volatile times if we don't see a huge acceleration in some of those payroll numbers, if we don't see a huge deceleration in some of the weekly jobless claims in the next 2 to 3 months as vaccinations reach a level approaching, hopefully, herd immunity. You talk about the weekly jobless claims, first-time claims for unemployment benefits, 750,000. I mean, folks, we are basically stuck at a level that would have been a record any time prior to COVID. I believe the record prior to the COVID pandemic on a weekly basis was 692,000 jobs somewhere. We basically set a record every single week for initial unemployment claims for the last year. That needs to change when we come out of this pandemic. And the reason why I stress it like this is because we are about to come out of this pandemic. So all this optimism that has been priced into the market, probably rightfully so, because boy, we had so many unknown variables in the heat of this pandemic, right? We weren't even sure if we were going to get a vaccine. We weren't even sure if there was going to be efficacy. We weren't sure how some of these companies would be able to navigate the changing landscape of everything. Companies have been dynamically able to shift their business, whether it was online, whether it's pickup orders, whether it's social distancing in stores. They suffered a lot less hardship, some of them, especially the bigger companies that could kind of weather the storm, than market anticipated. Then we get the vaccine news in November, right? Just gangbuster efficacy. Now we have the news that supply is going to catch up to almost every single American by the end of May. Well, now it's time for the economic numbers to pick up with it. Okay, the optimism's there, but the optimism is for the economic numbers to eventually pick up. We're coming to where reality needs to meet rhetoric. And boy, you want to talk about some volatility when we're waiting for non-farm payrolls for the month of April, or when we are waiting for the non-farm payroll numbers for the month of May and early June, or the month of June and early July. The expectations for those numbers, folks, we should see the service sector explode in a big way. And we'll see if that's going to happen. You know, encouraging news on the vaccine front continuing. I think we're up to about a 7-day average of about 2 million vaccines a day. But boy, the market's got to do some big work when you talk about jobs, when we're still seeing numbers of 750,000 about every single week of new people filing for unemployment. The economy's still in some tough shape, but things are about to change over the next few months. Whether they change enough to warrant the S&P sitting at 3,800. That's the question, right? I mean, look at this pullback we just got in the NASDAQ 100 from 13,900 down to 12,573. Just taking a look at the run we had from November, putting a little Fibonacci level. We're almost back to 50% of that run. 12,412 about would be a 50% pullback from the rocket ship we saw from 11,000. I mean, you traded up almost 3,000 points in the NASDAQ 100 from November 1st up to the highs of February 16th. Now, since that time, anytime you got some of these growth companies, they were experiencing some pretty ridiculous yields at a time of that price point. You back the 10-year up, we were sitting at 139.02. We've given up almost 6 full points in the 10-year, down to 133.02 now. Remarkable action across the board in this market. Let's jump to some of the commodities. Gold contract continuing to pull back. Gold trading at $17.13. Gold, just since January highs, you're trading basically at $19.62. We've given up 260 plus points in the gold contract just to start the year, let alone where we were on that spike high of 2,089. But the world has changed, folks, and we're going to see what Chairman Powell has to say today, because as we talked about with Kevin, the last couple times that he was in front of the Senate and the House, he really kind of overachieved in stating that they are a far point away from where they need to be. They are not worried about inflation, just as strong as he could be, saying they're going to be in there for the long haul. They're far away. And there's 18 million people currently still receiving some form of economic assistance. As you fall off the state unemployment rolls, you jump onto the pandemic emergency assistance programs that are out there. 18 million. We're probably still about 10 million jobs under where we were coming into COVID. So that is what Chairman Powell is looking at. All right, he's not looking at the optimism that the market has priced in of 3,800. He's looking at the raw economic factors of underemployment to the tune of about 10 million people that are not employed, that were employed prior to COVID. How he phrases that today when he's at the Wall Street Journal webinar, I believe that's coming up at about noon Eastern time. Be interesting to see how the market reacts. I'm not sure he can surprise to the upside anymore, folks. He could not have been stronger in the words that he had last time he appeared in front of the House and the Senate. But nonetheless, the spotlight will be on him in a big way as we got markets a little bit choppy up here. But again, take things in consideration, folks, from where we were. You know, you're talking about we almost doubled the price point to the lows of March. Now, you back this up on a 3-year weekly. Context, folks, is important in everything in life, all right? You look at the acceleration yesterday and you say, my goodness, and you should say, my goodness. We had a high of 39.34. No, that's a weekly, excuse me. But just check that out, right? A high of 39.34. We're trading at 3,800. But if you look at that chart, you'd say this is a one-way rocket ship to the upside, and you barely have a pullback, because on a weekly basis, you barely do. I mean, we entered the 2020 year at a price point in the S&P of 3,200. That's after entering the 2019 year at a price point of 2,500. Even if you back things up to the sell-off we had in September of 2018, you were sitting at 3,000. Well, we've gained 30% in the NASDAQ 100 since September of 2018, and that's with the collapse we had during COVID in the S&P. Just keep that in mind with this volatility. Pullbacks are possible, folks. It's been quite a rocket ship to the upside. We'll see where we go. Stay tuned. I'll be right back after the break.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The S&P is down about 13 points right now, hovering at about 3803. We got the NASDAQ 100 off 92 points right now. Market's getting a little bit of a pop off the lows, putting this back on a 15-minute. We've reached a low of 12,508. I mean, the moves are so large on some of these charts, folks. The bounces don't even look like anything, but we just bounced almost 100 points in the NASDAQ 100 right now. The S&P's reached a low intraday, this is, of 3788. So you're talking about 17 points right now off of the lows. We'll see where we go from there. Jumping around to other stories we have going on. So interesting when you look at where the future goes, what kind of trends stay with us in a post-COVID world. Disney, one of my favorite stocks out there. We have some Disney in my newsletter. Rocket Equities and Options have had it for a while. Been a great performer this year. Disney Plus, you can't state how far they've overachieved in that streaming sector. Now talking about what kind of a footprint do they have going forward. Disney is going to be closing 20% of its retail stores. That's 300 stores total. They're closing 20%. You're talking about 60 stores that they're going to be closing. The company is instead going to focus on expanding its offerings through online shopping. Not surprising, right? If you could get it done, you decrease the costs of operating those stores. The latest acceleration of Disney's digital transformation fueled by changing consumer habits that will stick around after the pandemic. So they're going to be closing 20% of the retail stores. Additional store closures and an undisclosed number of layoffs will follow. The company said it will instead bolster its e-commerce business by offering more products on its Shop Disney website. You're going to see this trend persisting across the board, folks. Retailers may not need the footprint that they once had coming into COVID as we've become a little bit more comfortable shopping online. Now, that doesn't mean that 2021 isn't going to be a banner year for some areas. You know, you go hang out at a mall, you eat at a restaurant, right? Malls are transforming in a way that they're going to probably become more of a social atmosphere. Maybe you see some corporate space built into mall facilities as they're not able to build out the type of retail space that they once did. I mean, how is Macy's going to be functioning in that environment comes to mind. Macy's down 2.3% today, but check out their chart from a low of basically $4, hovered around $6 for a while, got a little bit out of whack at 22. You back Macy's up on even a 5-year weekly, and you see we were sitting at $40. You do it to $4. We're almost back to pre-COVID levels, but Macy's got some work to do because their business plan, in my opinion, of operating the type of store square footage that they once did. And I love Macy's. I had a Macy's card at one point. They got some solid clothing there that I would go. But boy, how do you compete when so many companies are operating online and Macy's has a footprint that they have to pay for how many square footage in some of those malls? Not quite the dynamic that's probably going to persist moving forward as people become a little bit more comfortable with online purchases. You're seeing that shift kind of take place in Disney with 60-plus store closures. And the one I would pay attention here is that additional store closures and undisclosed number of layoffs will follow. Additional store closures. That's the beginning, folks. Okay? Disney's going to have some flagship stores. They're going to have stores across the board. But when you are servicing your clients to the tune of hundreds of millions of subscribers to the Disney Plus platform, you probably don't need to have 300 stores across the country. With all of those employees, with all of that rent that you're paying, Disney is making a shift in a big way to the online business plan, and you're going to see that taking shape across the board. Now, Disney, that's a weekly, putting it on the daily. We spiked to an all-time high. I mean, we had all-time highs back on February 22nd. We had an all-time high on February 23rd. We had an all-time high on February 24th. Got a little bit ahead of itself. Disney's got some volatility still, right? We got Disneyland in California, I believe just a mass vaccination site. They have not been open in a year. Movie theaters shut down, even Disney World in Orlando. They've been open, but nowhere near the capacity they might see in any other time. But again, that's about to change, folks. That valuation in Disney in particular, you're going to see a shift when you have movie theaters packed, when you have Disney World in Orlando packed for months to come. I mean, if you're thinking about a trip to Disney World, you better book it right now, folks, because everybody wants to travel, everybody wants to hang out, and that's going to be coming down the pipeline in the tune of 2 to 3 months. It's amazing when you think about the transformation that we are about to make in this economy to the tune of still dealing with tens of thousands of cases a day, still dealing with, unfortunately, thousands of deaths. I think the last total yesterday was about 2,000 deaths a day right now. That number coming down to a shift over the next 2 or 3 months where we are just basically going to be over the hump in a big way of COVID, and you're going to see some of these service companies in particular accelerate in a way that we've never seen in our lifetime. All right, jumping around to what else news we have going on. Let's jump to this story because it's an interesting one. Now, Amazon, some of these tech companies, folks, if you are looking for a long-term buy in some of these equities, it doesn't mean you might see a pullback, but check out Amazon, right? We're at the lower end of this consolidation. You're basically back to July prices in Amazon. You've been shopping around between $3,000 and call it maybe $3,400 since that price point. I have some Amazon for a long-term position. We're not in the newsletter, but we're reaching some levels. You pull back from 35.52. Amazon perfectly positioned across the board. Now, I say that because I'm a long-term believer, but Amazon's got some suspect business going on. When you look at, the way that they are, number one, using the data that they have and then using it against the products that are offered on their site. This is a great example. I was reading this article earlier. This is talking about a camera case maker, Everyday Sling. All right, it's from Peak Design, best-selling item since 2017. Amazon, basically, so this is the product, the Everyday Sling. And check out what Amazon does. And they do it across the board. They get Amazon Basics, right? So what do? They look at successful products. There's the successful product there, offered at $100. Okay, and what do? They come out with basically the exact same product offered at $35. That is now the number one new release, right? They're pumping that out. I mean, so comparable. You don't have to be a genius to see basically that it's almost completely a mirror image of one of the best-selling products that they've had. The Amazon now has at least 111 private label brands that offer 22,617 products. I'm not sure how you solve this problem, folks, okay? But as a shareholder of Amazon, they're a strong company. They're going to be okay. But as a consumer and as an American that wants small businesses to be able to do business, you can't have a marketplace like Amazon that is basically dominating the online marketplace, basically using data of products offered and then making that exact same product to cut that business out of line. That's going to have some harsh consequences for small businesses. Small businesses, one of the biggest drivers of the American economy. And you're seeing these allegations across the board of small businesses that say Amazon is using their products in a big way. The issuer was also scrutinized at length. This is talking about Amazon. You had Allbirds. Familiar, they make knit sneakers kind of in 2019, calling out Amazon for releasing a knit shoe with a striking resemblance. I mean, you can't fault Amazon when trying to make money trying to do this, but when you start getting into the areas of using the data they have to crush small businesses, that's an economic hardship that we do not want to happen, folks, for our economy. So it'll be interesting to see how that plays out as they take some heat, probably rightfully so, and they just start copying successful products, undercutting the competition. Amazon can just sell those products at a loss until they push those people out of business and hike the price if they want to. Not what you want to see, folks, as an American, as a consumer. We'll look at some of these tech stocks, though, because we're pulling up back to some levels that we want to take a peek at. We'll be right back, folks.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and we got the markets charging back. We got markets positive. S&P's positive by 2 right now. The NASDAQ NQ's now positive by 23. Dow positive by 39 points. Jumping back to Amazon for a moment. So, you tie in the moral obligation or even the economic implications of a company like Amazon, which operates one of the biggest marketplaces in the world for goods. If they start stealing the items that do well on that company, on that platform, not good for the economy. But Amazon's going to be fine, folks. That's not going to bring down the company, okay? You can have both. Amazon doesn't need to steal those products to be successful. You are seeing an area, again, if you're a long-term buyer, you're looking for a position, maybe you missed the run-up in Amazon from 16.26 to 35.52 and probably said rightfully so, how can I buy this thing when it's up more than 100% in the last 5 or 6 months? This might be an area that you might start to dabble in on Amazon. The cloud sector, AWS, they're the biggest player out there, and the cloud's the future of basically everything going on in the economy. I'm exaggerating a bit, but you can't state how important the cloud is going to be in the future when businesses are operating in an online environment. You see the likes of companies like Apple. Same thing. You've pulled back now $23 from the high in Apple. You're talking about a pullback of more than 15% off the highs, and you're back basically to August prices in Apple. Again, doesn't mean that you want to enter in a full position right now. We've seen the volatility to the downside that is definitely possible. We haven't really seen some strength yet, giving these equities the strength you might want to really load the house on them, but doesn't mean you couldn't start to dabble. If you missed the run up in the early days, you want some of these positions, and you're looking for some entries in some of these tech stocks in particular, you might start to take a look at them, folks, if you're a long-term buyer. That's the important part, because short-term volatility is here. We got a VIX right now trading at 26.33, rightfully so, pricing in some volatility, and as I've mentioned, all the optimism priced in for the economy to rebound in a dramatic fashion, and it's going to be time to pay the piper, as they would say, over the next 2, 3, or 4 months when we come out of this COVID pandemic, and you better believe that things should be quite the rise in terms of those numbers. All right, jumping around to another story that caught my eye. Just had a sun out there yesterday, and exciting times in my life. This story catching my eye in a big way as Democrats push the FDA to regulate toxic metals in baby food after investigation finds high levels. So a congressional investigation last month found the presence of toxic metals at high levels in many baby foods. You have 4 Democrats pushing draft legislation to the FDA for technical review, but want the agency to take regulatory action quickly. Some of the numbers in here are pretty harsh. Now, this is the actual news article talking about the panel that was referenced in terms of the study. So dangerous levels of toxic metals, this one back to February now. You get into some of the numbers, folks, just in particular. Now, they talk about all the different makers here. They got Gerber, they got Hain, Walmart's referenced out there as well, Campbell's in there as well. All of them basically putting out PRs saying that, products are safe, cited the lack of a current FDA standard for heavy metals in baby food. You get into the numbers, though, here and talk about it. So Hain in particular, not pinpointing them out as the worst offender at all, but one of them, the report out there said 100% of the Hain baby foods tested, inorganic arsenic levels were higher in the finished baby food than the company estimated they would be based on individual ingredient testing. It said that in August 2019, the FDA received a secret slide presentation from Hain that said corporate policies to test only ingredients, not the final products. Why aren't you testing the final product when you're talking about baby foods, folks? You're just testing the ingredients and you're not even testing the final product to make sure what you're thinking. Testing only the ingredients underrepresented the levels of toxic heavy metals in baby foods. And then you have the report said the FDA took no new action, though. To this day, baby foods containing toxic heavy metals bear no label or warning to parents. Manufacturers are free to test only ingredients. How are we not having baby food manufacturers testing their products for heavy metals? Hopefully we do something, folks. Sometimes you read stories, they just make no sense whatsoever. This is where, no matter how you feel on government, right, regulations can be burdensome at times and crush jobs. This is one of those areas that we need some regulations, folks. All right, you don't want heavy metals in baby foods. And these companies, you're telling me Gerber, you're telling me Hain Foods can't test the products for heavy metals before they push them out to the public? I hope we make some progress on that one. I got a personal bias in a big way, but guess what? We all do, folks. Babies, come on. We need some healthy babies out there in a big way. But that one caught my eye, of course. So some of the companies, the fastest growing temp companies of 2020, look toward a post-COVID world. Zoom, the one that jumps out the most. Zoom with their earnings, I mean, my goodness, check out the 2 daily bars we got going on in Zoom. Now, Zoom's up about 3% right now at 350. I almost chuckle because, boy, quite the pullback. We were at 440 just on Tuesday. We're trading at 351. You were actually at a high print of 458 overnight when they came out with their earnings Monday evening. Stellar earnings, folks, stellar in a big way. But Zoom's got a lot to prove when we come out of COVID. They're a super profitable company. I think they made $600 million net for the fiscal year. They had revenue of $2.6 billion. You're talking about an online company with magnificent growth that is churning some big-time profits. But the market is going to struggle with some of these tech companies in particular of what valuation makes sense because they aren't quite sure yet what the growth rate looks like going forward because the growth rate is not going to be sustainable that they had last year. Whether it trails off dramatically, whether they see some real big churn on the pay accounts. I mean, Zoom in particular, for clients, paying clients for Zoom with under 10 employees represented about a third of their paying business. Those are the customers the market is most worried about that may see a high level of churn. Because if you've got a small business of a few employees, maybe they were all working remotely, maybe a Zoom subscription made sense. Maybe you're bringing them back in-house now. Maybe Skype, maybe the free version of Skype suffices in a world where we're post-COVID and everybody's back in the office. You're going to see some valuations. You're going to see some volatility as the market struggles with some of these equities in particular, some of the high flyers in particular, in a big way. How about high flyer? Makes me think of Square. Now, Square out there buying Tidal, the music platform of Jay-Z. So getting into a little bit of the music business, expanding their reach. You have Square down 4.5%. with the market, you could say, on that valuation, on that purchase. But Square, again, my goodness, you go from 32 to 283. Some of these fintech companies in a big way, we're trading at 223, basically back to where we were December 16th. But again, all things considered, folks, lofty valuations as we operate the online environment. Of course, a company like Square through the roof. Is everybody doing business on their computer? What's their growth rate look like in the future when we're actually out there doing business in real restaurants, real hotels, real storefronts? Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We now got the market swinging back to negative territory. S&P is negative by 5 points at 38.12. Jumping back to Amazon real briefly, not to do the whole show on it, but man, the story out there last night, Amazon reportedly in talks with the NFL for Prime Video rights deal. That would see them scooping up exclusive streaming rights to the Thursday night games. It's going to be remarkable, folks, when you see the landscape change, when you see some of these companies like Amazon, Netflix, Disney, the owner of ESPN, right? They were in talks, stories circulating last week, not verified, though, of trying to solidify their deal. But boy, nothing like live sports to bring you into the action, because live sports, not something you ever watch on a replay. So that's something to pay attention to as well. Let's jump to our man John in Oakland, Michigan real quick as we wrap up the program. John, good morning, man. Thanks for calling in. Do we got him? There he is. John, good morning, man.
Hey, good morning, Tom. How are you doing today?
I'm doing great, man. How are you?
I'm fantastic. Hey, this is just one of those fanboy calls. I wanted to tell you how much I appreciate the way you break down these stories. You know, I used to watch another channel, an alphabet channel years ago, and they always, they throw out a story, and then they bring in two people, one, point counterpoint. And you always walk away confused over what the heck. But like with the Zoom story, the way you broke that down with, after COVID, what's going to happen, makes you think, should I buy the dip or should I sit back? You deserve a pat on the back. I really appreciate the way you break this stuff down and lay it out there. So congratulations.
Well, I appreciate the call, John. I appreciate the kind words, man. And I'm so lucky to have so many great listeners like yourself out there, man. And I really mean it. The callers, the listeners, the people in the Tigers Den, the YouTube Den participating, man. Very fortunate at TFNN to have people like you and the traders out there supporting us, man. So thanks so much.
Have a great day, and I'll be out here again.
Thanks, John. Take care, man. Thanks for tuning in, folks. Stay tuned. Fast Market coming up.